Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Solana and its token Sol. None of the content is financial advice. Right now, the price of Sol is slightly under $150. That represents a move back from the 20-week moving average highs. Now the prices are lower than the 21-week exponential moving average, but slightly higher than the 20-week simple moving average. Simple moving average is coming in at around $150, whereas exponential moving average is at around $160, roughly speaking. Right now the prices are also at a key juncture, slightly lower than the 0.618 fib level from the 2021 high to 2022 lows at $164. If there is a further pullback, the next area of support for the Fibonacci levels is at around $134. Last time around in the April crash, the support was at around 0.382. If there is a lower high, if there is a higher low than the 0.382, the higher low to look for is at around $134. Then the secondary support is at around $104. That's where the prices kind of held support in March of 2025 and early April of 2025. Looking at the machine learning based price forecast for Sol, again all of the content from here on available on cryptoweeklies.com, link on the bottom of your screen. It's all for free. No sign-ups required. So this is the machine learning based model for Sol's price forecast, trained on the weekly price action since essentially since token launch in April 2020. The directionality forecast is established by this pink line, which says that all things equal, the price of Sol has further upside than downside at this moment. In terms of directionality, the magnitude of the move forecasted in a bull case at one standard deviation or non-euphoria bull case in the next 6 months is between $162 to about $317. That is without euphoria or one standard deviation bull case. The two standard deviation bull case or the bull run with a euphoria in it in the next 6 months, if that kind of bull run is ahead of us, the price ceiling forecasted by the model is between $177 to about $506. If on the other hand the next 6 months provide significant resistance and pullbacks in the market due to bearish activity, the support forecasted is between $81 and $136 for Sol. In terms of the regression based fair valuation for Sol, the fair value comes at around $189. This fair value represents a non-linear polynomial regression based estimation in this pink line, which says whenever the price is below the pink line, the likelihood is it's in an accumulation phase or at least in a downturn, whereas in an upturn or an upswing, the prices are above the pink line. In terms of adding a one standard deviation residual to the pink line or the fair value, that one standard deviation residual downside added to the fair value helps identify great entry points for Sol. Again, not financial advice. Whenever the prices are one standard deviation residual in this green line, close enough to this green line, that's where any dip buying opportunities the market presents are usually a great entry points. Right now that level is at around $93, whereas the fair value for Sol is at around $189. The opposite of a one standard deviation residual to the downside is one standard deviation residual to the upside, and together this green and yellow line price stays about 68% of the time. Here at the top of the range, that's where major resistances are occurred in this yellow line that takes the price action at this point at around $390. If that were if the price action were to go to that level, that per this model, that would be constituted an overvaluation for Sol at this point in time. In terms of where the prices could top out again in terms of the two standard deviation residual applied to the fair value, which is this orange line, and that level right now again is coming in at around 800 and slightly under $800. Back in 2021, the prices stopped really close to this orange line, but as the asset matures and across multiple cycles, this ceiling could be somewhere at a midpoint between the yellow line and orange line. For this particular market cycle, that is between $400 and $800, somewhere close to that $600 level. And in terms of the Fibonacci levels also, that 1.618 for Sol, if the price action were to have a meaningful all-time high in this iteration of the bull run compared to the 2021 cycle, this time we did the Sol price action did reach the 2021 high at one point, but again no weekly closes above the 2021 high at around $260. The 1.618 is at around $417. That's the conservative bull run or euphoria peak estimation for Sol. The 2.61 is at around around $670. That is again close to the midpoint of between that 1 standard deviation and 2 standard deviation regression based forecast for Sol as well. So that is a key level to watch in terms of regression based valuation. Right now the DCA levels, again whenever the risk level color coded based on accumulation risk, right now it's coming in at around less than 10% at this point. All things considered, if the price action were to go to that 20 to 30% risk per this model, the price of Sol could be between $211 to about $274 in the shorter term. In terms of the moving averages of worth noting is the simple moving average, 20-week simple moving average estimated the risk levels again over here whenever they are less than 20%. That's where the DCA or the dollar cost average makes the most amount of sense. Again, this is a falling knife in the bear market again, so that's why no single model can do the job of identifying the bear market as well as the bull market lows. But nonetheless, if and when the prices go to that less than 10% risk, there is at least a short counter trend rally after that. Right now, the latest iteration for Sol in that low risk regimen was between essentially late February till about mid-April of 2025, when the risk levels were less than 10%. Right now they are between 20 to 30%, coming in at around 26%. The midpoint of the non-euphoria bull runs for Sol is between 40% and 60% risk. If the prices were to go to that 0.4 to 0.6 risk, the forecast is between roughly speaking $220 and $250 for Sol per these models. Time weighted average price presents a clear accumulation territory whenever the price is below this blue line, especially in the bear market. That model helped identify a range for accumulating Sol throughout 2022 and till about late 2023. Right now the prices are above the time weighted average price. The time weighted average price comes in at around $77. This blue line is a key line to watch, especially in the year after 2025, in 2026, starting the middle of 2026, when and if the market cools down and has a bear market and accumulation for high quality asset below their time weighted average price, could make sense as they made sense in 2022 from the 4-year market cycle theory. Again, that's just a theory. If you like to follow along on these risk-based valuation of high quality crypto assets, you can give this video a like and subscribe to stay updated. In terms of the overall bull run peak for Sol with estimation based on the 3 models, the conservative estimation comes at around $550 for Sol based on the regression risk or the DCA risk, the time weighted average price risk, and the SMA risk. Weighted risk is at around, roughly speaking, 1/4 or 25%. The reward is at this point in time with price action at around 150 is estimated about 3.7x from here. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.